What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Decoded. Hey, happy Friday, everyone. First off, I hope everybody had a great week, trading and otherwise. So we are going to go over exactly how we traded SPY today relative to the 920 crossover strategy. So first thing in the morning, obviously, is we look at the chart. We pull up the pre-market chart. We look at pre-market high. We look at pre-market low. And then we're looking at 5-minute double tops, double bottoms, these kinds of things so we can use these areas as targets throughout the day. Now, I'm not going to show you my 5-minute chart just yet. I'll get to that here in just a little bit. But, it happens regularly. First thing out of the chute, we are trending down, trending down, trending down. Many of our members caught this rejection off this 477.84 back to the downside, turned it into a really, really nice trade back to the downside. So there it is. There's that first cross. Now, again, we didn't have that initial cross or that first cross. We had it in pre-market. And you know me, I do not like to trade the pre-market cross at open. I like to wait until we get that fresh cross. So at any rate, we had several of our members took this back to the downside. I didn't take this first cross to the upside only because I knew that I had resistance right down here. Now, I did take this cross, so I waited until we actually breached kind of a late entry. Could have very easily taken the fishtail play. So the question is, you've heard me talking about the fishtail. What's a fishtail? The fishtail is the space between the 9 and the 20. Now, should have been a really, really nice trade. I mean, we had this resistance / support. Actually, we breached support back to the downside, making that new resistance. I had this safety right here. Had I taken this trade right here, which I did not, this would have been my predefined risk. So before you ever enter a trade, you must predefine that risk, meaning if it goes against you, a certain dollar amount, percentage, spot on the chart, candle, or whatever, you will take yourself out of the trade. In this case, for me, it would have been this line right here. Would have been a perfect entry. But again, I did not put on that trade. I put it on right in here. We breached VWAP back to the downside. And VWAP, again, is support when you're above it. It is resistance when you are below. So I wait to breach to the downside, figuring, you know what, we've got this gap down here. We've got yesterday's gap, which also happened to be pre-market low. So I'm thinking, you know what, we're trending down. We had a couple of reports that came out this morning at 8:30 Eastern time. Kind of mixed. The reports were a little bit mixed. So I figured, you know what, we're going to continue down. We're going to go fill that gap. And then whatever happens after that, happens after that. This was not a profitable trade, obviously, because we have the frowny face under the candle. It turned out to, again, not be a profitable trade, but that's okay. We don't care. The only thing that we are worried about as 920 traders is we are worried about the execution of our trades. Now, I didn't take this cross back to the upside, again, because I had this resistance up here, and I thought, you know what, we'll probably bounce, we'll probably reject, and then come back down. Again, I didn't take the trade. Oh, well. I took this next trade back to the upside once we were able to make kind of a higher high. So I took this bounce off the 20 back to the upside, rode it up, turned into a really, really nice trade. Once we were able to break this area right here, this 478.39 to the upside, we were off to the races. Again, turned out to be a very, very nice trade. Now, next cross, I did take this one back to the downside. It was decent. I mean, it wasn't great, but it was still decent. We had to work through this area right here. Once we did, I kind of thought we might at least try to make it down to VWAP, but we had that support. We had that 1-minute support here at 478.12. We did not reach that. Again, close that out. Nice trade, decent trade. Back to the downside. Now, here is where it gets really interesting, and I don't want to show too much, but here we go. So we had this area right here, this 478.91, 478.91. We had a heck of a time getting through this area. I mean, we bounced around, had this cross to the upside, didn't take it because I knew I had this area right here, waited for this retest down here again at this level, 478.39, and jumped this play right here off of this support. So I did jump this play off of this support. Now, the all-time high of SPY before today happened to be 479.98. And we're thinking, you know what? we had these mixed reports today. Are we going to go for an all-time high? And we never know when it's going to happen, but it just so happened today. So at any rate, we bounced through this area. We got a head of steam, and it was really, really nice. And then we had a whoop. And what did this whoop do? This whoop took us to an all-time high a couple minutes later in SPY. 480.02, 480.02, an all-time high in SPY. So a really, really nice play. Back to the upside. So at that point, we made some good support in here and able to run this back again, back to the upside. Now, I didn't take this play. We were all celebrating in our group. Hey, we made an all-time high. We made an all-time high. But I didn't take this cross to the upside. It would have been a really, really nice trade to the upside. But again, I didn't take it. I'd rather show my wins. I'd rather show my losses than say, hey, I took this and made $27,000 on the trade. That's just not based in reality. I didn't take that. We continued moving up and up and up and up. And the folks in the group, they were saying, hey, when can we put on another trade? And I said, hey, wait for a pullback. Wait for a pullback. So you could take pullbacks. You could take a bounce off the 20 back to the upside. You could take a recapture of the 9 back to the upside after that pullback. Or you can do, in my case, I knew I had support right in here at 4. It's actually 481.16. 481.16 right in here. I knew I had support. So we breached to the downside, got a crossover to the downside, had what we call a double cross to the upside. So a double cross, all this is when you open below the 9 and close above the 20. So when you're uptrending and take a double cross, that is a higher probability play than just a normal double cross on a regular day, on a sort of a ranging or a ranging day. So high to low, low to high. So at any rate, I took this double cross to the upside. It turned out to be a really, really, really nice trade back to the upside. We did not have a red candle close until we just pushed higher and higher and higher throughout the day. And you can look at this chart thing. Is this thing ever going to slow down? And it did. It did. It absolutely did. We bounced around for the next hour and a half in this range right in here. So between 481.89 to the upside or to the downside, and this range right in here, 482.36. So I'm getting ready to show you something really, really interesting because I had a question earlier. Folks asked, okay, so you put on the trade, you're sitting in the trade, you know that you're uptrending, but you're getting these signals to get out of the trade based on the 1 minute. What can you do to kind of give you a little bit of ease to stay in those trades a little bit longer? Well, here's what you do. You pull up a higher time frame. A higher time frame, for instance, this is a 3 minute. A higher time frame gives you a different perspective of what you are looking at on the 1 minute. Now, you can pull up a higher time frame on any given day, and you're going to see the same thing on the higher time frames. So the higher time frames are for trend confirmation. As long as on the 3 minute or even the 5 minute, look at the 5 minute, folks. Absolutely beautiful. We rode this 9 all the way up to the high, bounced around, and finally breached it to the downside. So you could have potentially, you could have been in this trade for hours and hours and hours. Certainly on my entrance right here at 12:10, could have ridden this thing all the way up. But again, I've got several hundred members in our group, and everybody's asking questions. We're talking back and forth. So anyway, I had a couple of decent plays on this move back to the upside, but you can switch time frames. Again, there's your 3 minute. There's never a spot to get out on the 3 minute. On the 2 minute, look at that. Same thing. I mean, we breached it to the downside at this level of support, but we kept on running up. On a day like today, if you can switch time frames to either the 3 minute or the 5 minute, just sit in that trade. Just sit back and relax. Now, as a 920 trader, obviously we're using the 9 as support on the way up, and we're using it as resistance on the way down. So that's why we use the 9 and the 20. The 20 is that kind of that last level of support. If you are relying on the 5 minute or the higher time frames, 20 for support, you've probably made a crossover to the downside on the 1 minute, the 2 minute, and the 3 minute. But again, as long as you're riding the 9 on the 5 minute or the 3 minute, Stay in the trade. There's no reason to get out of the trade. And again, there's different schools of thought out there, folks. There's P&L traders that say, hey, once I make a certain dollar amount, I'm out of the trade. And that's fine. There's absolutely nothing wrong with, you can do very, very well as a P&L trader. And then there's a chart trader. The chart trader essentially says, okay, this is my process. My process says I'm not going to close the trade until this happens on the chart. In other words, we're letting technical analysis get us into the trade, so we're going to let technical analysis take us out of the trade. So anyway, there's the 3-minute. Again, really, really good, solid trades all day long. So again, check those higher time frame, folks. Check the 2, check the 3, check the 5. One thing I would also add, if you are presently struggling with what strategy to use, now there are countless strategies out there, folks. And again, there's nothing new in the market. There's no special strategy. There's no special indicator. There's no special sauce. There's no one size fits all when it comes to trading. It is whatever works for you. Don't jump around from strategy to strategy. If you're struggling and you're looking for a different strategy because the strategy that you're using, that process is not working for you, by all means, look at a different process and see if it works better. But generally speaking, what you want to do is you want that, whatever process you have, you want that process in place and execute according to the rules of your process. Trading is like every other business out there. It is all a process. You put it in place, and then whatever happens after that happens after that. That is what trading is. You go through the specific steps of the process to get the result. You can be results-oriented or you can be process-oriented. Results-oriented says, hey, once I'm out of the trade, I'm out of the trade. I made my money. I'm done. Process trading says, I'm going to let the market take me out of this trade based on certain market conditions. And again, we are letting technical analysis or a specific reason gets us into the trade. We want a specific reason to get us out of the trade. So essentially what that's going to do is that's going to keep you from jumping in and out and in and out and in and out of your trades. And you're thinking, why am I not getting these big wins when everything on the chart, you look back at the chart at the end of the day and go, why didn't I stay in that trade? Or why did I get into that trade? So it's the process, folks. Please follow the process. So that's SPY in a nutshell today. Again, we made an all-time high in SPY, which is absolutely incredible. Now, if you like our videos, please give us a like, consider subscribing, maybe, leave a comment, and share it with your friends. We would greatly appreciate that. If you are interested in live daily trading, so live daily trading, bell to bell every single day, please check out our live trading Discord, Trading Decoded. Wonderful place to be. Very interactive, lots of members in there, but we will take care of you very personally in there. Again, thanks for spending your day with us today. We greatly appreciate the fact that you've taken the time out of your day to watch this video. I hope everybody has a great weekend. I hope that these videos are of value to you. Now, if you're interested in more information about the 920, head over to 920trading.com. The entire strategy is there. You can also sign up for our free weekly newsletter, which comes out tomorrow. So go check it out, folks. Again, thanks a lot. Hope everybody has a great weekend, and we will see you in the markets.